Hello and welcome to this brand new episode of Smart Money. This is our year-end special where we look ahead to 2023 and talk about the top themes and stocks to invest into in the year to come. Our guest today is Trideep Bhattacharya, who is the CIO Equities at Edelweiss AMC. Trideep has over 15 years of experience in the business of fund management and manages the Edelweiss Mid-Cap Fund. He'll talk about the big themes that you can watch out for in 2023. Trideep, thanks a lot for joining in. At the onset, I just want to check with you what your view is on the market overall. Is this a year where you think India could perhaps underperform, considering all the global challenges that we've seen upon us?
Good afternoon, Sonia. And I would say that overall, my view from a medium-term standpoint with regards to equity markets is constructive. I think given that particularly the last 6 months have been quite buoyant, there could be a period of volatility, particularly in the next 3 to 6 months, the first half of calendar 23. But I think from a 2 to 3 year perspective, there are some strong underlying economic themes which are playing out on a bottom-up basis in India, which makes me quite constructive on India's earnings estimate, India's story, and India relative to the globe as well.
Okay, so let's talk about all these themes one by one, right? You've come up with 5 top themes to invest into in 2023 and perhaps something that our viewers can look at as well. Let's start. What is the first theme that you're looking at?
I think the first thing that that I would like to talk about is basically the capex theme overall. And I think somewhere around December last year, January this year, we did an insightful analysis as to summing together the capex plan of all the listed companies. And for the first time, what we saw that the combined capex announcements made by private sector companies turned out to be 6 to 7 times that of public sector capex announcement. This was the first time that we saw such a phenomenon happening in the last 10 years. And mind you, these are capex plans to be executed over the next 3-4 years. So this is from a medium-term standpoint a positive. We are somewhere towards 9 to 12 months down the line from that starting point. And I would say the product has been the progress has been fairly robust in that count. The capacity utilization in the country has marked towards about 75% odd levels from where capex levels usually start. And secondly, multiple sectors have actually joined the bandwagon more than what we started for. So the theme has become stronger. And I would actually pontificate this as one of the strong themes, not just for 2023, but even from the next 2 to 3 year perspective from an Indian context.
Okay, so that's the first theme for 2023 that Edelweiss is very bullish on, which is the private sector investment demand, or the CAPEX theme, and their overweight on industrials, capital goods and construction. Now, of course, we do know that some of the companies here, the likes of Cummins, ABB, Siemens, etc., have done very well in 2022 too. Trideep, that was my follow-up question to you. Many of these companies, the market leaders in this space, whether it's Cummins, whether it's L&T, they've started to perform this year, right, in 2022. So do you think that this is there's still some more headroom for growth, both in terms of valuation as well as earnings potential?
I would actually say that 2023, particularly towards the second half, would see an improvement in earnings estimates of these companies to start playing out. So yes, the stocks have rallied in anticipation of earnings upgrades, but I think that will probably come through towards the back half of 2023 as some of the projects that they've undertaken in second half of 2022 get through the execution time frame, and that's when the stocks on the face of it, on the back of higher earnings estimate, may not look that expensive, but then overall from a growth standpoint will look fairly robust. So to answer your question, yes, the valuation expansion has happened. The earnings expansion lies in front of us over the next couple of years, particularly in second half of FY23.
Okay, so the theme number 1 that you're looking at is the CAPEX theme. Theme number 2, let's move on to that. You're looking at a big rebound in credit growth, because if there are CAPEX plans, then somebody needs to fund it, right? So you're bullish on financials?
That's a nice way to put it. I would put this in a bit of a context that overall, if you look at the Indian financial services sector, particularly the subsector which is lending financials, over the last 3 to 4 years, they have seen a bad asset cycle play out. most of the books or the books of most of the companies, whether even the PSUs as well as private sector banks, are reasonably clean. That's a good starting point. Second, overall, the Indian corporate sector over the last 3, 4, 5 years have nicely deleveraged to a level where they are surplus with cash flows. So overall, they are looking to invest, and with regards to whether it is working capital or brownfield projects, they are looking out to get a bit of funding in. And that is why we have seen, particularly towards the back half of fiscal 23, which is the current year, some pickup in credit growth, and we would surmise that we would see more of it as the year progresses, particularly in calendar year 23. And hence, we feel that the lending part of financials as the earlier part of economic recovery would stand to benefit from the same. And hence, we are overweight lending financials across our portfolios.
Okay, overweight lending financials, and I was going through your mid-cap fund that you manage, and within that, some of the stocks that you have in the financial space are Federal Bank, there's City Union Bank, there's Cholamandalam Investment, there's Credit Access Grameen as well. Now, what do you do at a time when there are some issues that come up? Say, for City Union Bank, there is this recent issue as well. There could be some hit to their loan growth that we've seen. So when there are these minor roadblocks for companies, do you ignore it, or do you use these as a dip? Or do you use the dip as a buying opportunity?
A great question. I would say, to answer your question in one shot, to use them as buying opportunity in dips. But let me elaborate. Financials is a very macro-linked sector overall. And somewhere around the line, there could always be a bit of a hiccup, whether it's an opinion with regards to NPAs or any such measure, so to speak, because the regulator is deeply involved in the same. And hence, off and on, you do get opportunities where you can participate in, particularly in MSME lending overall, or SME lending, or MFI lending in a cleaner way, particularly when it comes to financials, which are actually seeing a good bit of growth as far as credit offtake is concerned. So on the whole, if you look at the segment credit growth, we have migrated from a 6 to 7% growth sometimes last year to close to about 16 to 17% credit growth as we speak. And we have probably settled around 13 to 14% credit growth sometime next year. And all of the sector, particularly the lending financials, would be a beneficiary of the same, as some of the names that you mentioned clearly fall in the same sector.
Okay. In fact, on City Union Bank, just wanted to apprise our viewers that the RBI had found a divergence to the tune of almost 260 crores in the NPA provisioning of City Union Bank, and hence that stock was under a bit of pressure. That's why I was asking whether, when these issues come up, how do you sort of approach it from a long-term investor standpoint? All right, got that. So financials is your second theme. Let's move on to the third theme, which is household capex demand. Tell us a little bit about that. Is it purely restricted to the real estate companies, or do you look at, the tile makers, the sanitary ware companies? What is it in household capex that attracts your interest?
Yep. To explain this, let me kind of put a bit of context around this. As we studied the situation with regards to Indian real estate market, both in tier 1, tier 2, tier 3, all put together, what we found is that the unsold inventory had reached 10-year low. Generally, when such a situation happens, the sector bottoms out from a long-term perspective. Usually, real estate is somewhere around 5 to 7 year cycle. And I would surmise that we are probably somewhere in the first 2 to 3 years of the same, where the unsold inventory is bottoming out, following which you might see some better launches coming about, maybe higher prices, and then kind of, the other side of the cycle overall. But net, in the context of 5 to 7 year cycle, we are probably somewhere in the first 2 to 3 years. Now, while this is the phenomenon that is happening, how do we play this? One way to play is basically to own the builders. The second way to play this is to buy the ancillary providers to these companies. And I have historically found in my career that generally buying the ancillary companies or companies like building materials, etc., who supply to real estate as a sector are a better way to play this, because they are better margins, better return ratios, and occasionally they have better moats as compared to many other companies. So all in all, to play this uptick in real estate cycle, we'll probably be more overweight the allied sectors than the real estate sector put directly. But on net balance, from a next medium-term standpoint, we do see this as a genuine positive bottom-up themes, very specific to India, playing out over time.
Okay, in fact, I do notice in your fund, in your mid-cap fund, you've covered the entire gamut, right? I mean, you have a real estate player like Brigade Enterprises, you have the ceramic supplier like Kajaria Ceramics, and you have a cement supplier like JK Lakshmi Cement. So perhaps this is a great way to play the household capex demand as per Edelweiss. Don't just pick the real estate guys, but also look at some of the ancillary guys who supply to real estate makers. And those are where the real alpha lies, particularly because of the kind of appreciation we've already seen in some of these real estate stocks. But let's do one thing. There's 3 themes that we've already spoken about, but there are 2 more to go. In case you missed them, the top 3 themes that Edelweiss is bullish on, there's the capex theme, there's financials, as well as the home improvement theme. But there are 2 more themes to go, so do stay tuned in. We'll slip into a short break and be back.